Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Tuesday, March 15th, 2022. Yes, March 15th, beware the Ides of March. So, anyhow, maybe not every one of you gets that. That's Julius Caesar was killed on March 15th. So, anyhow, bringing up our disclaimer to remind you that this webinar is for illustrative and educational purposes only. We'll be talking about the Forex markets and about some trades that got on and some other things. We'll even dabble in a little crypto today. If you have not done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and make sure you pass it on to your friends by liking and sharing our videos. We would greatly appreciate that. So, without any further ado, let me pull up our live active screen and oops, we got the browser mixed up here. There we go. Sorry about that, folks. All right, we have the forex-trading-unlocked.com website pulled up here for you, and we already have the workstation tab already pulled up from our navigation bar, so we're going to toggle down. We're going to skip past the numbers. There are definitely big numbers coming out this week. The biggest thing that we have to watch out for is Fed Day. We know that we have the U.S. Federal Open Market Committee meeting going on, and likely we are going to see a hike in interest rates. How bad are we going to get a hike in interest rates? Well, I think the quarter point is pretty much the assumption of everybody. It's on everybody's watch list. I doubt that we would not have that happen if they were to do nothing with rates. I mean, they could use the argument because of what's going on in the Ukraine and what have you. The reality is they should have been raising rates a long time ago, but whatever. Now we're playing catch up. So, but let's look at the Euro US dollar here and see what's going on. The Euro is getting a little bit of strength, probably from the purported talks going on right now with the Ukrainians and the Russians about a potential ceasefire. Whether or not that will happen or not, time will tell. It would be great for all of us if this whole thing would somewhat subside and get mitigated down. What will make that happen? Well, that's a whole another ball of wax. I don't really know. I can't tell you what's going to make that happen. Cooler heads must prevail. There's a lot of issues as to what's going on here, and the reality is most people in the United States think that this war just started around a month ago, when actually this country has been up in a civil war and battling itself for the past, since 2014. So what's going to happen? Well, we know that the commodity markets are rocking, right? So let's see how things are impacting what's going on in the world. All right, we're going to pull up another forex-trading-unlocked.com website page here, and we're going to go to pull up another workstation page, and let's see what's going on with some markets that impact what's going on with us. So XTIUSD, this is the spot oil. The futures that we can pull up from the CME, but that's in a lag. So we can see that crude oil is down once again today. Now, don't be overzealous on being a bear in the oil market so quickly. You realize that markets go out like they come in. If you split this current move in half, let me make this a little bit smaller so that you can see it. There we go. So when we topped out here making this higher move high, we've now come back a lot. I mean, we topped out at 126 in the cash. Obviously, we're trading at 94 right now. That's a big slide in the market, to happen over the course of just a week and a half. Now, it's great for all of us that got already sticker shock at the pump from gas. What is making this subside? Well, I think that the fact that the tensions in the Ukraine are, not subsiding, but they are not getting more inflamed, I guess. So, and I think that's the reaction that's going on right now. There's also obviously the crude deals that have been moved on outside of the United States. There's increased production going on, but then there's also supply issues that are going to come into play as well. So, don't expect this market to crash anytime soon. So the reason we're looking at this is because oil will impact certain currency crosses, like the US dollar yen, the Australian dollar US dollar, the US dollar Canada, and also the British pound US dollar, which we are now going to get into. All right, so we have the euro US dollar. And by the way, if you have any questions about what we're talking about or any other currency crosses or markets, just leave a comment in the chat on either YouTube or on Twitch, and then I will get to those as we get through this webinar. Okay, and oh, by the way, thanks for the like on YouTube. We really appreciate that. Thank you very much, and anyone else that is helping out with to promote forex-trading-unlock.com. All right, so euro US dollar is rebounding today. You can see that it's pretty much in the middle of its range. Yesterday we had set up this corrective upside target zone. Are we bullish the euro US dollar? Not even in the slightest. The only thing that could possibly make us bullish in this on this market would be if we had an end to the conflict in the Ukraine and an incredible slide in the price of oil. None of which I think is going to happen anytime soon. So I would view any upside move that we are currently in the process of, which is only a 2-day move, by the way. Let's see how things go. I think that because of the Fed meeting, you're going to have, especially after this afternoon, going into tomorrow's afternoon, you're probably going to see the currencies, especially the majors like the euro, the pound, the Swiss, they're probably going to go sideways. The yen, it's very likely that will, well, the yen may not, because that's the one where we know the Bank of Japan is pretty set on their principles. We do have some issues as far as taking sides. Japan is our ally, but they are not a NATO country. And as far as where their stance is on the Russian-Ukrainian thing, you got to remember that Russia's a lot closer to Japan, than Japan is to the United States. And Russia's actually really close to the United States as well, which we know from our northern border. Just ask Sarah Palin; she can see it from her back window. If you remember that comment. So, but which she was being facetious anyhow at the time. It was a joke. So, all right. So we're going to look at this 111.53 area. I think this is where you're going to see the most resistance. We already had a low here and kind of near here back in November. So very likely that this will be the exhaustion gap. So especially if it happens, I could see us maybe grinding a little bit higher today, maybe even settling up near the highs, and then tomorrow maybe getting a little bit more of a rally, and then settling into a sideways trade until the Fed announcement. Now, once that announcement comes out, it's very likely that you're going to see a lot of gyrations going on in the marketplace. You're going to see a lot of the algos are going to kick in. So be cautious tomorrow and today. If you're not already in a long or a short trade, whichever currency cross, whatever your methodology is or signals, stick to your methodology, but be mindful of the fact that you have this Fed meeting. Whether they do or do not raise the rate, the algos could kick off a lot of your weak stops on both sides of the market. It's the kind of day where you'll have a ridiculous range pushing new highs and new lows for no reason, and then the following day you're going to either resume a trend or begin with a new trend. Sorry, it's early in the morning. I haven't really been talking. I need to take a sip of water here. Oh, much better. Okay, so euro US dollar, this is our upside correction area. Now, as far as if this market slides, let me tell you something, brother. If we take out this low from back on, March 7th, which is just over a week ago, if we take out 108, this 108 area, basically 108.10, 108 even, we fall below there, 107.5 is a heartbeat away. Now, as we get down towards those levels, we should find more and more support. As long as the conflict in the Ukraine and also with the sanctions doesn't impact things. Now, here's something that you have to be mindful of also. You can put all the sanctions you want from the U.S. and the EU on Russia. It's all going to backfire on both countries because we do rely on them for certain commodities. Obviously, we know what's going on with the European situation. And there's another thing that people don't really talk about, which I have lots of friends in the EU and in Germany, and they talk about this, that there are all kinds of factories that produce goods that are sold to the Russians. And some of these factories actually are almost exclusively for production for products that go to Russia. So By you not allowing any country to trade with Russia and blocking trade, that means that your own companies are not exporting. Now, countries like Germany are not like the United States, where you have all kinds of resources. So your exports are huge. They are an export country. They have to export more than they import, otherwise they'd be upside down. Which, like the United States. Regardless of that, this is going to weigh on their currency. So the strength in the euro is going to be weakening because of high oil, which even just this correction now is not the biggest deal in the world. Remember, we're coming off of a major rally. Oil has doubled just in the past couple of months. It went from 60 to over 120. I don't know about your math, but that's a big deal in my world. So this little retracement that we have now is just a profit-taking move. And there's also futures and options expiration rollover going on, which I spoke with yesterday in my webinar. For those of you that are only Forex traders or are not familiar with futures and options, the financials all expire in the months of March, June, September, and December. Oil actually expires monthly. So we have a simultaneous expiration of oil, as well as the financial futures, as well as the treasury notes, even the S&P 500, all of them. Doesn't matter which one. So they all expire. These causes a lot of unnecessary intraday moves that are basically caused not because of any type of more buying than selling or more selling than buying because of market conditions. It's because there are big funds and even little groups of traders that are, or even collection of traders that have to flip their contracts, meaning that if they want to maintain a short position or a long position and they're in the front month March contract, they have to move it to the June contract for the financials. Or if you're in oil, you would move it from the March to the April contract or March contract, or excuse me, April or May contracts. So by doing that, you're just causing transactions that just are flipping. You're not change. There's no consensus that's changing. But when you have this, you have an unwinding of a lot of trades and options expiring. It causes a lot of volatility. So just be careful. So for intraday traders, if you're trying to just catch little swings, the next 2 to 4 days, just stay out. Go figure out something else to do, whatever, or draw a line in the sand with whatever your signals are, and just be mindful of that. All right, so Euro US dollar, we have our upside and downside. Let's look at the British pound US dollar. Let's see, do we have any questions on Twitch? We do not. We have no questions on YouTube either. Okay, that's fine. All right. We do like the shares and the likes. Thank you very much. We do definitely appreciate that. All right, British pound US dollar. As you can see today, the market's floating just below its highs. And let's see, the low yesterday was 130.05 basically, and the low today was just a little bit below yesterday. Now, what do we have forming here? We have a short-term potential buy signal forming. I said forming. It has not happened yet. Okay, so let's just say, for hypothetical purposes, that the British pound settles where it's at right now, this afternoon, as we move into the Wednesday's trading for the currency markets. Should we do that, this would be a short-term buy signal. Now, when I say short-term, I mean very short-term, okay? Now, what would make this be valid enough to get us up to this area here? Because we were looking yesterday at where would we be able to possibly retrace to, and it's this 133.25 to 134 area. The British pound has a higher likelihood of having a move such as this than the Euro US dollar does, okay? Mainly because they're an oil producer. Bank of England is in tandem with the Fed, so those variables that are giving dollar strength versus a lot of other currency crosses, it's not necessarily as influenced in the British pound US dollar. So should we close where it's at today, I would key off of the low from today. So for you aggressive bulls, you could use a little bit below the low of today as a stop area for risk. And the reason I say that is because you don't want to try and catch a falling knife. We're not trying to pick a bottom, and no matter what, this is a counter trend trade. Okay, so right now we're making lower lows, lower highs, lower move lows, lower highs. that's indicative of a bear trend. We only have a bullish move that has started today. It's intraday, and it could be exhausted very quickly. Notice last week we had a nice little bounce here on one day. Looked really good, kind of like what today's going on. And then the next day, boom, it got slapped. Now that's also because the price of oil was trading at a very high premium, and there was a lot more issues going on as far as with Russia and the rest of the world with their sanctions that they had put on Russia, and then now they've expanded them even more. Now I think that you do have a good chance of seeing a correction. Can we make it all the way up to this area? The pound has, when it gets volatile and swings, it definitely could easily do that. Now also, the UK is separate from the EU. Remember, Brexit happened. I know we talked about it for 3 years. There was pre-Brexit, then there was Brexit, and now it's all over. And the good thing is that because of their sovereignty, the UK is not being drained or dragged into this conflict with the Ukraine. See, the EU it's on their borders, so now they're totally involved no matter what. Okay, and as far as how much money they pump into it or anything else like that, the EU is on its own. And you got to remember, when it comes to NATO, there's only 2 countries that really provide the military strength, and that's the United States, number 1, and then the UK. So is the UK going to allocate a lot of forces to NATO for this effort against Putin? Well, that's going to be very touchy. They're definitely going to be slow to act because they're not right on the border of Russia, but they are a stone's throw away. You know, it's not like, I mean, when we're talking about Europe, you know, going from Germany or going from Russia to the UK is like going from, you know, Chicago to California, you know. So, I mean, it's not like a big deal. So they're not like halfway around the world, but they do have a buffer zone with most of Europe. So anyhow, we have our upside potential. If we close today at these levels, then you would have a bullish engulfing line buy signal. If you want to learn how to trade the bullish engulfing line buy signal, then read the book High Probable Japanese Candlestick Patterns, available on Amazon.com. And another way you can find that is if you go to our navigation bar to products, courses, and services, you hit down to High Probable Japanese Candlestick Patterns, and it's got a little video on the book, and it gives you a link to Amazon for the Kindle and book version, and a little preview of a chapter too. So, all right, now as far as going down, how far can we go? Well, if this buy signal does not occur and we actually hit support again, now, I would be careful selling in this area right now because the odds of a retracement are pretty high. So if you're already short, I'd keep your stops tight, and I would key off of this area right here as far as your stop area. Because if we get above here, it's very likely that we're going to challenge this 133 area. But as far as breaking, I think that if we slide, we're not going to have the weakness in the pound like you have in the euro. I wouldn't say that you're going to, right? I mean, the low here is basically 130 even. So I think you can get down to 129 to 128.70 area. At that point, I think you're going to find support. We've had a big leg down here over the past few weeks, and I think a lot of this has been fueled by the rally in oil. So, but we'll see. We'll see what's going on. All right, so anyhow, those are our levels for the British pound, US dollar. You have our upside correction area and definitely your risk level if you are short right here. Because if we get below here or above here and we're short from somewhere up here, I mean, obviously all your profits are going to fade away. So I would hope that you have your stops somewhere in this area. And be mindful, once again, going into this afternoon into tomorrow afternoon's number at 1:15 Chicago time. It's 2:15 Eastern time. That's when the Fed announcement comes out. That's when they're going to most likely raise the rates and expect to have extreme volatility during those hours. Okay, so it's just very important that you pay attention to these things. All right, now let's go to the US dollar Swissy. And this one's pretty interesting how it spiked higher today. Now, we were talking about this one yesterday, how when you look at it on a chart basis, excuse me, this market really was going sideways for months, and it looks on this chart that there was a really big swing trade going on for most of the time, when actually there was not much going on at all, because if you look at the range is basically from 91 even up to 93 half. It's only a $2.50 range for the US dollar Swiss. Now the volatility, because if you look at the euro and even the pound, their average true ranges for most of this time period, except for certain days, were pretty tight. And this market was definitely jostling around. So I would expect more of the same for tomorrow when it comes to how this market's going to react. Now, we've taken a lot of upside potential out of this trade. One of the reasons I think you're seeing US dollar Swiss momentum to the upside, meaning dollar strength and Swiss weakness, I think it has a lot to do with the fact that the Swiss have done something that they've never done in their history. They're not staying neutral. They have imposed sanctions on Russian oligarchs and the Russian Federation. So now that is not the normal thing for the Swiss to do. Now, I don't care what your opinion is, whether you think they should do it or shouldn't do it. That's really irrelevant. What is relevant is the fact that they've never done that. Even during World War I, World War II, the Chinese conflict, the Korean conflict, you name whatever war, whatever was going on, countries that were involved on both sides did business with and through Switzerland. So it's not uncommon for them to be that way. They've always been neutral. It's the one thing you can count on, and that was something that was just expected. So for this to go this swinging way changes things for the Swiss, especially as far as how they can be regarded and trusted, so whether it's a good thing or a bad thing, I'm not going to even go there, So, anyhow, let's get back to the numbers here. So, should we have a rally tomorrow? I think you've already seen most of the upside. I don't see this market getting much more above 94 half to 95 even. As far as parity being in the mix, we are a far cry away from parity with the US dollar Swiss. I think that a lot of the strength that you're seeing now is because, like I said, of the reaction to what the Swiss have done. And that is pretty much going to be out of the trade now as we move forward after the Fed meeting, unless they were to enact and they get back in the news saying, I don't know, find some more money or chase somebody, cause something of a reaction as far as money with some of these big oligarchs in Russia and what have you. So we'll see how that pans out. Now, as far as numbers, where can we go? I think that if we have a correction, meaning that the U.S. dollar sells off. Now, remember, the dollar index has been rallying in a big way. And, in fact, you know what we're going to do? Let's take a look at that right now. So the dollar index, as far as hitting the $100 mark, it's very likely. We have enough momentum, especially if the euro falls back on support. Now, right now, we have the euro in a corrective, trying to correct to the upside. We have the British pound that potentially has a buy signal that goes off today after the close, setting up for a potential correction to the upside. Now, the euro and the pound are the two biggest weights in the dollar index. If that happens, you're going to see a retreat in the dollar index and see us come back towards this 98 level, maybe even 97. Now, we have divergence in the currencies, meaning where there's dollar strength, there's dollar weakness, and other currency crosses. And after the Fed meeting especially, I think we're going to start to really see some new trends evolve. Remember, one of the things we love about currencies is the fact that they trend 70% of the time, whereas most markets trend only 30% of the time. So as far as trending, what are we going to get? I would look to buy breaks in the US dollar Swiss. So as far as if we take this last low, and let's say today is the short-term high, I would say that we have a good chance, especially with the Fed meeting going on, and if oil stays under pressure, stays where it's at and stabilizes, which I just don't like the levels, and I don't like to see it stabilize there, but hey, it's better there than higher up at 126, 130, right? So here's our corrective move back. I think you'll find support definitely in this 92.80 down to 92.48 area. You saw a lot of highs here before. So if the new trend is really going to be a bull for the US dollar Swiss, expect it to be a grind. Don't expect us to make. We're not just making a run for parity. I mean, we could. Don't kid yourself. We could. Anything can happen. But it's just not very likely with the way things are set up right now. All right. So U.S. dollar Swiss. Should we take out this high once again? I think 94.5 up to 95 even is the extreme. So there's not a lot of upside potential. Be careful. I wouldn't sell into that rally unless you get a valid sell signal. Now, as far as what the market's doing here, let's say that the Swiss settled right like it is right now. This is a potential short-term corrective sell signal setting up. Sorry. Excuse me. Need to take another sip of water. My throat is really dry today. Okay. Much better. Instantly, like magic. All right. So we have our little downside corrective area. This is some of the biggest potential for a move, and what I would be more mindful of is if we have this short-term sell signal, or basically if this was settles like this would be a little doji star. It wouldn't necessarily mean a turn in the market, but it would probably mean that we set a short-term high and we're set for some consolidation. Now consolidation would have us definitely, most likely, I think, get a slide back towards at least 93.20 to 93 even, which then puts us a stone throw away from 92.80. Very likely that we could find a base of support somewhere down in this area before we start to try and swing higher. So, I mean, mostly, see how we had this range over the past 5 months? Where this lower part of this range is here, where we were bottoming out and then trying to spike higher, I think this is going to lift up to this area here. So this is going to be a really good foundation for buying between this in this little area right here in the middle term, meaning the next probably 3-4 weeks to 2.5, 3 months, you know, for the next quarter basically. So going from the first quarter through the second quarter. So not anything very super long, but definitely something like that. All right. Okay. So let's see. Do we have any questions on Twitch or nope, nothing. We had a lot of questions yesterday, which was nice. Thank you guys for that. We're chiming in, and then we had our replay that there was even. It's kind of funny when we have the replay going. That's when we have everybody chiming in when I'm not on the chat. Sometimes I am, and sometimes I'm not. All right, so let's go to the U.S. dollar yen. Now, remember how we were talking about how these commodities totally impact the U.S. dollar yen trade? So what's driving the U.S. dollar yen strength? Okay, well, U.S. dollar strength, we have the interest rate equation because the Bank of Japan is definitely not in the raising interest rates category. So that right there gives us dollar strength. We are right in front of the Fed meeting. So any short-term sell-off right now, what's going on, I would be very careful trying to sell into this move. I think there's a lot more to the upside. 117.5 was my short-term upside target and then have some consolidation before we target 122. We could be at 122 in the Japanese yen we could be in the next 2 days, it could be in the next 2 weeks. With the interest rate equation driving this market, let's add to it oil. Even though oil has come back off of its $120-something high and it's right around $100, what does that mean for this market? Well, oil is still high in price. So this hasn't caught up with the whole rally in oil yet. So that's going to support the U.S. dollar versus the yen. So once again, we have two major factors that are driving the price of the U.S. dollar and the yen. Okay. So now here's an interesting factor. Somebody had asked a question about the British pound yen. So to give you an idea of for those of you that have heard me before, unless you're new, I always say that the best indicator is the markets themselves. So, and especially about the currencies, the great thing is you can use so many crosses to help guide you in what to do with the one that you're actually trading. So we said we have a short-term buy signal setting up in the British pound. Okay, let's just hypothetically say that today we get that buy signal. Okay, what does that have to do with the U.S. dollar yen? Okay, well, the U.S. dollar right now is definitely in a short-term profit-taking mode today. Okay, but the JPY is very weak versus that market. Okay, so let's just say though that the U.S. dollar yen holds, and then you have the pound actually start to rally against the dollar. What does that mean for the pound yen? Well, for the pound yen, That should make that bullish. And oh my goodness, look at this. I didn't even look at this chart today. We have, oh, that's the British pound US dollar. I'm sorry. British pound JPY. Here it is. All right. We have a follow through rally to the upside today. So that's where this market's going higher. Let's say you're a pound trader and you trade pound crosses, or you're a yen trader and you trade yen crosses. You don't even touch the US dollar. But you can use the US dollar as your indicator for where your strength or weakness is going to prevail. So if the US dollar overall is trending higher against the yen, okay, and then the pound is looking to stop trending down versus the dollar, and let alone starts trending bullishly against the dollar, then that would mean that the pound, since the yen is weaker than the dollar and the pound is stronger than the dollar in the short run, that means the pound should be stronger than the yen, which is why we're getting this rally. Now, this market had been in a bearish sell-off. We had, interesting enough, if you look at this little low right here, this is called a 3 inside up buy signal. That if you read the book, High Probable Japanese Candlestick Patterns, you can figure out how to trade. You can learn how to trade that or incorporate it into your trading methodology to use yourself. Interestingly enough, from that buy signal that was set a while back, we are coming right into this 50% 0.618 upside target range. To be a good area for this market to top out at. Maybe I saw the high today right in front of this, but like I said, if we have the buy signal in the pound US dollar, okay, then unless the US dollar yen starts to really sell off, I would expect to see follow through to the upside in this pound yen. So for you, who was ever, I can't remember who asked the question yesterday. If you're watching that today, here's a little follow through on what we had spoke about yesterday. All right, now let's get back to the US dollar JPY. All right, so as far as if we were to have a downside correction off of this high, somewhere around this 116.25 to 115.80, I think, is at the extreme. So basically coming into just around these highs or just below it. I think that you could base and raise like basically this base here up to this area here before we start to make another wave higher. We hit our short-term upside target. A correction could very likely happen. However, be mindful of the fact, once again, though, we have the Fed issue. If oil is, like we said, oil is down today. Okay, if oil starts to rally, and for instance, today it's down, but it's off of its lows. And if it starts to pop back up above 100 in the cash, which means I think that would be around 106 in the futures, then, you know, you could look at this last slide in oil as a profit-taking move. And if things escalate in the Ukraine, right now it seems like things are not being mitigated down, but at least there's talks and things are not as bad. I think one of the biggest things that they're going to have to quash is if to come to peace, is that, let's say Putin backs down or stops where he's at. How are the Ukrainians going to follow up with the fact that they're still having a civil war going on there? Basically, it's been going on since 2014, and especially since last summer. So before the Russians even came in to the Ukraine a month ago, you had bombings all over Ukraine. You had people being attacked all over the place. We weren't talking about that because we were talking about Afghanistan and COVID-19. Most Americans don't follow global news. Currency traders should be following global news all the time. Now, do you have to believe everything you hear? No, but you need to know that where there's action and trouble going on. That is for sure, okay, because it helps to guide you. So with the US dollar yen, once again, if oil is just profit taking, they start to get a rally, this will support this market. So you'll probably see us start to inch closer towards that 122 target. Now, are we going to rocket up there in a very short amount of time? I don't think so. I think we're going to start to grind higher. You know, this market, as you come in, you go out. So it's very likely that we could see this market comes up and then starts to retrace, come down in this area, and then bounce. Okay. So, but if this, like I said, if crude starts to rally right away, and if the 10-year and 30-year bonds really tank, go down, which means rates are going up, then that would really put pressure on this market, on the yen. And then there's also wheat futures. Why am I talking about wheat futures, a commodity? Well, there's something that Japan doesn't have besides oil. Wheat is something it really doesn't have either. Now, is it the biggest commodity that it imports? No, but it does import a lot of wheat. So the fact that the price of grain is skyrocketing, then that adds weakness. Now when wheat is traded in with Japan, and most of it comes from the United States, those transactions aren't done in yen; they're done in dollar. So if the dollar is strong and wheat is strong, that's very expensive for them in Japan, which also gives us strength in the U.S. dollar yen trade, because the demand for dollars over yen is so much more. So now we have our upside target, we have our downside correction area. Right now we don't have a sell signal. There's no counter trend signal forming right now. So maybe you have one, I don't. But we may have a correction. Who knows? I mean, we already hit my 117.5 target, and now we're trading above it. So for us to consolidate or have a pullback and then have another buy signal or not is definitely in the realm of possibility. Just remember, we're making higher move highs and higher move lows going into today's trade. We made a higher move high on the day. So just because we're lower, don't just get all sensationally bearish because of one little move in one little hour or one little day. Okay? Now let's get to the Australian dollar, US dollar, for another currency in this trade zone. All right, so yesterday we had this little area of support. We were bobbling around it. We basically came down and touched just shy of our 71.53 area. This is a market that overall I think has turned on the long term. It's been a bear for a while, but now that Australia has opened up and some other things, if you want to really hear the fundamentals, you can listen to yesterday's broadcast. So I think that today we found good support. And going into the Fed meeting and everything else, I think that you're going to see the Australian dollar, US dollar consolidate where it's at to start to trend higher. In the short run, we have made a lower move low after a lower move high. But in the intermediate term, we've come off a higher move high, and we could be setting a higher move low. So that's the biggest thing. So if we don't take out this area here, we're definitely very bullish. And if we failed from this downside target zone, we already would be, because we have this upward sloping support line keeping the trend intact. So if any failure from here, definitely would be bearish. I don't think we have anything in the market that could drive that. The interest rate factor is the only thing that is helping to suppress the Aussie dollar a little bit, but the Bank of Australia is also on the same page as we are. They're just not reacting yet like we have. We'll see what happens. As far as an upside target, I think that you have to look to challenge this high up here. Do I think it's going to happen in a very short amount of time? No, that I don't. I think we're finding a bottom right now. We're going to find support, and then after we get past the Fed meeting, we're going to start to grind higher. Could we have an explosive rally? Absolutely, we could, but I don't see that happening. What would drive that? I think if you had oil start to rally back up towards that 120 area, and if you have a big rally in gold, basically commodities, that's when you're going to see a big rally in the Australian dollar, US dollar. But until then, I think it's going to be a grind higher. I would be very leery of sell-offs. If you have a very good valid sell signal, obviously stick to your trading plan, stick to your guns. Just be mindful that right now, if you are a bear, you are a counter trend trader. And right now, where we have corrected back, I look at this current downside move over the last week and a half as a correction, not a trend move, but a corrective move. Okay. All right. So now let's go to New Zealand dollar, US dollar. Take another sip of water. All right. New Zealand dollar, US dollar. Also pretty much in the same thing going on with the Australian dollar. We're looking for this to grind higher. I would look for a challenge of this last lower move high, and then a challenge of the past higher move high. There's no factors right now I could see that really cause a big sell-off. Only if we fail from this 66.28 would I be very bearish. Now, The one thing is that New Zealand, unlike Australia, is coming out of the lockdowns a little bit slower. They have still some things that are in place that are big, but one thing we have going for us is we do have a potential buy signal. So like I said, in the Australian dollar, just like in the New Zealand dollar, I view this current downside move as a correction, not a trend move, and we'd have a piercing line buy signal forming. Now it has not formed, but because it means it hasn't settled rolling into the next day, but it is forming. So let's say that the market settled right where it's at right now later on today. That would give us a short-term buy signal. And then I would key off of the low of today, just a little bit below that for any aggressive bulls. Or if you're adding to a bullish position, that would be a nice area to look for a challenge of new highs. As far as how high can we go, I think that if you do get through these highs, we can get up to around 70 even and then start to consolidate. I wouldn't expect any type of runaway bull market in New Zealand dollar, US dollar. First time chat from viewer Mr. Pip Shunter. Hey, hello, how are you? Say hello. Thank you for saying hi and watching the video. If you got any questions about anything, you just chime in and let me know, alright? Alright, now let me get to, oops, don't need that. Gotta get off the screen and get on the screen. Okay, let's go to the US dollar, Canadian dollar. So for the beginning of the webinar, I mentioned, because of the commodities, that this would be one of the currencies we'd be looking at. Boy, this one is a grind. This one's tough. It's a lot like the Swiss US dollar Swiss market, where it's been going sideways for months. This market had been a bear, then it was in a big correction going into the end of the last year. Now it's in a big sideways. Now, there's a lot of factors here that could help to propel the U.S. dollar Canada trade. As far as what that would be, that's a really good question. We've had a lot of issues with the U.S. and Canada over, I mean, it just boggles my mind, and you've heard me say this constantly in these videos. What's your trade for now, Mr. Pips Hunter? Okay, let me tell you, the U.S. dollar yen is my trade. We'll go back to that real quick since we have a question. So U.S. dollar JPY. So as you heard me say, I'm bullish. I've been net long the U.S. dollar yen since the fall. And when it started gyrating in this area here, I had taken some profits and then got back in. And it basically been net long. I'm looking for 122. Once it gets to 122, I'm going to lay off part of my position and then just either have my stops taken out to the downside should there be a major correction, which I don't see happening anytime soon. I have an even longer picture of the U.S. dollar yen getting up to around 140. Now, this could be where the dollar could be crashing versus other currencies. The U.S. dollar yen is my biggest bull play for the year. Like, I've been long since last year, and I intend on being long the whole year. So it's just a matter of taking a little profit and then any type of correction adding back onto it. Okay? So let's see what we got. We got someone else trade in. I'm a beginner and can't sleep, so thanks for this, mate. Trying to learn, have a viewer clue, and trying to take what I can appreciate. Yeah, you know what? If you watch our past videos, I always try and educate during every one of them, so you don't have to look at what's going on in the market today. You can go to our YouTube channel. Twitch only stores videos back for 60 days. So on our YouTube channel, Forex Trading Unlocked, you can look at all kinds of videos. I have videos for even on options trading and stuff like that, which even if you don't want to trade options, you can learn about how it's incorporated into currencies and things like that and futures, because all markets are interrelated. So yeah, thanks for signing in. This is foreign correspondent, and I'm glad. I guess I have to say I'm happy you couldn't sleep. You found us. So thanks again, and yeah, if you have any questions about any particular markets, you just go right ahead and don't be afraid to ask. Hey, on YouTube, hey, yeah, we got someone else saying hi too. All right, Gangarju, thank you for saying hello. Let me say hello back to you. Thanks for viewing. So yeah, as far as do I trade intraday, he's got a good question. I don't typically trade intraday. That's a very good question. So on YouTube, we have a question by one of our followers, and how do I trade? So as you just heard me talk about the U.S. dollar yen. I obviously trade not just in the or intermediate term. I trade in the long term. So typically, not that I always have. There's times where I don't have a position on in any market, but it's really hard not to in this environment not take advantage of long-term trends. And that's how you're going to make your money. You can't fight the machine. So that's a good question about trading intraday. If you read my book, I Probable Japanese Candlestick Patterns, one of the things I highlight is that there's a reason why most people don't think that Japanese candlestick patterns work. They think it's a great looking chart versus a bar chart. Like, for instance, this is the way we used to look at charts. Okay, just regular bars. It's hard to see the openings. You can see the opening and closes, but they don't stick out like they do this way. You can see the up and downside momentums of any given day. That visually gives you information to process, okay? So those things are great, especially when you're dealing with a monthly chart, a weekly chart, a daily chart, and even an hourly chart. But here's the problem, though, especially with the advent of the computers and the algos, okay? There is so much noise, and you have pockets of volume, whereas it used to be when I was on the trading floor, even if liquidity was light, you had volume pretty much at every price. You didn't just trade through areas. You know, there was always, you went tick for tick, or that's in the futures. In the forex markets, it would be pip for pip, or virtually pip for pip. Okay, now you have these explosive moves where you gap through pricing. Okay, so you get chewed up. So now the good thing about the FX industry is you don't give up an edge as much as you used to. The spreads are pretty tight for most brokers around the globe. If you have any questions as far as brokers to use, you can always go to our navigation bar and you go to our where is it here? You go to under mentoring. No, where do we have it? We have it under, oh, this is really good. Here we go. Tools. Go to partners right here, and this will help you out as far as finding a broker and what have you, and even trading platforms and what have you. So, but yeah, that's a good question. As far as intraday, because of the noise, I don't trade it, because here's what ends up happening. You have a lot of false signals. Now, it used to be when there was a trading pit and what have you, you didn't get chewed up like you get chewed up now. The high frequency trading and algo trading, there is so much pushing around in the short run at a micro level that you have all these extreme trades. Like, you would never see these 1 hour spikes in volatility that you have now, that they're erroneous moves. Okay, they not that they would never occur, but were just not as frequent. That is for sure. And that's the problem, is that on an intraday basis, you have to think about what's your reward and what's your risk. You know, on an intraday basis, you can't be risking that much, because odds are you're not trading on a big range. You're looking on a smaller dimension as far as highs and lows and the area you're looking to trade in. So how much do you have to make? You know, and I always tell you, no matter what, the least you want to have is a 2-to-1 reward to risk factor, meaning you want to make at least twice what you're risking. I usually trade with anything that's 3 to 5 times as far as that's concerned, just because that eats up, that takes care of your losers much quicker, and it's also a better way to be profitable. 2-to-1, unless you have something that is very, 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 very viable and valid as a signal, I would say don't do that. Okay, so if you have the right money management rules, you can capitalize off of long-term moves versus short-term moves. You're just going to get chewed up. You're going to have such a number of losses versus wins trading intraday. And this is the thing that I want all of you new traders that are, if you're still listening or out there or watch this video later, one of the things that veteran traders love is the fact that short-term traders, especially now, keep on trading intraday. And they know that there's just this pool. It's kind of like, you think about like those poker sites and gambling websites and even betting sites. They know that there's always an influx of beginners that don't treat trading like a business. So let's see. Sorry for the beginner question, but couldn't trade with.
Yeah, you can trade with $100. Absolutely, you trade the micros in the foreign currency markets. That's a great way to do it. If you go on my website, check out the partners thing, forex.com. You can definitely sign up for their account. I would get a demo and practice first. Practice principles that you learn in my videos or other videos that you watch or books or what have you before you get involved. But yeah, $100 you could trade on a micro level just to get used to. And now there's nothing wrong with trading the micro level. You're still trading money, and also it's better to get burned and learn with a little bit of money than to have a lot of money and just go through it. Okay, it's much more disheartening. So yes, you can trade with $100. With $100, you could trade micros. You could theoretically have. I mean, now you don't want to have all of your account $100 at risk, but you could, if you wanted to. You could easily have, say, a euro contract on and a Swiss or a yen contract on. When you get to the British pound, it's a little bit more expensive, but yes, you could do it if you had only a pound on and nothing else. But you need a couple $100, and you could actually trade a nice portfolio of, say, the pound, the euro, the yen, maybe the Canada and the Aussie. Those five. But then I would say you want to have like 200 because you want to be able to take your swings. So, and definitely start with a demo first. Get used to order entry, and also make sure you have a trading plan too. So, and by the way, foreign correspondent, you are welcome. So, and yeah, anytime you need to get some information, just remember to check out my website, forex-trading-unlock.com. Or you can go also to on LinkedIn, our company page, Forex Trading Unlocked. We also, whenever we have events coming up, we usually announce that and have that for you to check out. And you can also get connected to other traders that way as well. So yeah, great questions. Thank you guys. Really, really appreciate you chiming in today. Let's see. We got another question here on YouTube from I hope I'm saying this right, Gangaraju. What is your trading style? He asked. My trading style. It's kind of funny. I used to be more of a gunslinger. I started out trading sugar and treasury bonds back in in 1990. So I've been in the trading business since 1989, and I started trading in 1990. So yes, I've been trading for that long. 32 years, going on 33 years in June. Yeah, middle of June, I'll be 33 years in the trading business, and I'll be 32 years of trading. So my trading style has evolved. I used to trade intraday. That was when there was a trading floor, and back then I didn't even use computers. Computers just started to come online, and I would use, like I said, if you heard me earlier, the markets are your best indicators. So I would key off of I would trade treasury bonds, and I would watch how the S&P 500 was railing in the cash versus the futures, and whether it was at a discount or a premium. And based off of certain moves with the 10-year and the currencies, I would know pretty much which way the bonds would go. So it was a great trade. I used to love it. I mean, I started out trading only 1 lots and 2 lots in sugar and bonds, and within probably 6 months, a little over half a year, I was flipping 10s and 20 lots in the treasury bonds, which the margin on that's a lot higher now, but that was from off the floor. I mean, just the commission alone, I was paying $17 round turn, and I was probably trading at least within 6 months, I was already trading every bit of 50 to 100 contracts a day in the treasury bonds from off the floor while I was clerking in the S&P 500 bit. The bonds were traded at the board of trade, not at the CME. So that's when I was doing that. Now I trade very, very much like the old guys do. It's an older style, meaning like if you know anything about spread traders, they put on positions just like long-term traders. Whether you're just outright long or short, you're looking for long-term moves. You don't trade the noise. It gets back to that question about do you trade intraday. You avoid the noise by trading on a daily, weekly, and monthly basis. You have to have a little bit more risk, but you also have better parameters. Okay, and once you're in a trade, you can reduce your risk, which then gives you even more of a reward to your risk once the trade is on as it grows. So great question. So as far as my trading style, it's much more on a longer term basis. Now I may only be in a trade for a day or two. Sometimes you hit a buy signal or a sell signal. There's that much volatility. It'll hit once you hit your mark. get out. Once you hit your upside objective or downside objective, the trade is done. You come back when you have another trade. Sometimes those trades could end up trending way beyond your targets. It doesn't matter unless that's what you're looking for. And even on a long-term basis, like I have, there's times where I will get out. I've been on a trade for, like I've been on this US dollar yen trade for months. When it hits 122, you heard me say I'm going to take profits off. Even if it explodes through that afterwards and I can't buy more into it, I'll just let whatever's left ride and then work it from there, you know. So maybe I will give up some of the opportunity on the table, but that's irrelevant. Here's something you need to remember. Pigs get fat, hogs get slaughtered. Don't be a hog, you're going to get slaughtered. Be a pig. Get fat and happy and make a lot of money as you're trading, but do it over time. Do it over time. Let's see. We have Teresa Laura. Do you trade S&P 500? Hey, how are you doing? Yeah, thanks, Teresa. Great question. I do trade the S&P 500. I started my career in 1989 at the CBOE when I was in the OEX pit, and also in the United Airlines pit. At that time, United Airlines there was a takeover bid for United Airlines in the summer of 1989, and because I was a hockey player and I'm also 6'1" and bigger than most of the guys that were in those pits, so I could literally barrel through and hand orders to a broker and back then brokers would try and eyeball orders you were handing to other brokers. So I got my teeth cut in the OEX, and then I went to the S&P 500 pit a few months later, and I was in the S&Ps for from 1990 until 2000, until 2004. Then I was bouncing between the Board of Trade and the CME, where I would be in the grain room, and then every once in a while I'd go by the S&Ps in the afternoons. But by 2010, after the merge, when they were phasing the CME into the Board of Trade building, when the CME bought the Board of Trade, that's when I left the trading floor, because I really was only I was trading S&Ps, bonds, grains, a whole bunch of things, but I wasn't really, I was doing more of it, setting it up from home and then going downtown to go to lunch or go out in the afternoon, have some beers with some people after work, because there just wasn't any business on the floor anymore. So, yeah, great question, Teresa. Yeah, and if you have a question about the S&P 500, I don't know if you trade S&Ps, I will definitely respond to that and answer that for you. So, yeah, thank you for chiming in. I always love bringing up stories from the trading floor, especially the S&Ps, because I was there for a long time, and that was the wildest, woolliest, baddest pit ever. That's for sure. And I equate it to if you look at sports, you got to be kind of tweaked to be a hockey player. So that would mean if you're a trader, you got to be kind of tweaked. But if you're an S&P 500 trader, yeah, you're like a goalie. You're a special kind of crazy, because the volatility in that market is insane, and it's kind of funny. I hear these young pundits today say, it's never been like this before, and blah, blah, blah. And I look at them, I'm like, okay, you didn't work in the S&P 500 during the first Gulf War, let alone the second Gulf War, or September 11th, which I was on the trading floor when that happened, and that's a story I will never forget. September 11th, walking on the trading floor when the first plane hit, and that was right before the S&Ps opened that day. So, let's see. Do you think this is okay to trade now or wait for tomorrow after the news? Okay, really good question, Teresa. I think you probably just started watching, probably joined us a little bit late. Yes, I've been talking about the Fed meeting tomorrow. I don't care what market you trade, if it's Forex, futures, binary options, stock options, stocks, if you have a position on right now, I would never say get out of it. Stick to your trading plan and what have you. Now, if you're where you could be stopped out and you don't have much into a trade, you might want to take a small loss or a small profit and just get out of it, because usually on Fed days, if it's a non-event, it's a non-event. If it's not a non-event, then you have erroneous spikes, meaning that wherever the market's at, you can have, like for instance, the way the bond market's at tomorrow, whatever price it's at before the number, you could see the market rally a whole dollar or more in the bonds, which would be a huge move, let alone a range for the day in the bonds, or used to be, that's for sure. And then collapse and break all the way down and make new lows and be down a whole dollar or more on the day. So you could have within a period of from 1:15 to 2 o'clock. Remember, the Treasury bond market closes at 2 o'clock. That's 3 o'clock Eastern time. Whereas the stock market doesn't close until 3 o'clock Chicago time, 4 o'clock Eastern time. So the bonds, right after the Fed, the Treasury market has only 45 minutes to trade, and it can get nuts because then it closes and the equity markets are still open. So you get a ton of just crazy moves that happen. And if you're an intraday trader, like going back to our question from our YouTube question from was it Gangaraju? I can't have to say it slow, sorry. Which was a great question. If you're an intraday trader, stay out until after tomorrow afternoon. Don't even trade until Thursday. And especially answer your question to Teresa. Yeah, if you don't have any reason to be in, now, like I said, if you already have a trading plan and you're long or short, whatever market it is, stick to your guns, but don't, I would not initiate any trades tomorrow because you get a lot of false signals. And if the algos kick in, and you got to see what they do. What happens if they actually do a half a point tomorrow? Now, most gurus and pundits out there are not expecting that and say that would be the wrong thing to do. Well, I come out of the Volcker age when they used to pop the rate a half a point out of nowhere. There was no Fed meeting. They just did it at like literally 12:30, 12 o'clock and lunchtime. All of a sudden, Volcker come out there and be like, yeah, we're raising the rates a half a point. Everyone's what? You know, people are screaming from their lunches and whatever, running for their desks and their phones and God knows what. All right, let's see. We got another question here. Let's see. Forex and S&P 500, US 30. I'm a newbie. I don't have all your years of experience. That's all right, Teresa. You know what? Every day you learn a little bit. Everything I know has taken years and years to acquire. I started reading about the markets when I was a little boy. I was watching the stock pages and the gold market and the treasury bond market when I was literally 8 years old, reading it on the Sunday paper, looking at the weekly updates, from I didn't even read the daily paper. I was in school. So it takes a long time. Focus, learn little things. Also keep it simple. My biggest thing to you is if you don't read my book, I have a whole chapter dedicated to money management. Money management is key. Trading's a business, Teresa. Have rational expectations. Have a trading plan just like you'd have a business plan. Stay disciplined. Stick to it. And here's another thing. There's always opportunity. The question is, will you be there for that opportunity? Don't try and push it all at once. Don't try and make it all happen at once. Every day learn a little bit more. Always take everything with a grain of salt too. Just because I say something doesn't mean it's always right or it's perfect, but I definitely try and steer people in the right directions. That's why I'm on shows like TFN. By the way, for all of you that are listening right now, TFNN.com, which is they focus mostly on stocks and options. They have a lot to do with TD Ameritrade and stuff like that. I'm on there pretty much every Wednesday at 8:40 Central Standard Time to give them the Forex and futures, especially a lot to do with oil. I called $100 oil last year. You can watch from past videos. Of course, that was a no-brainer. I mean, by executive order, you knew that was going to happen. So, anyhow, let's see. I know it's 9:30 at the market gets big crazy moves when the CME opens. So 9:30. So you must be on Eastern time then. Yes, you get the big crazy moves because then the futures are they come alive. Now the futures are trading they trade 24 hours, electronically. But 8:30 was when the stock market opens. So then you have the cash. See, that's the big thing is what there's always the question is when it comes to derivatives, does the dog wag the tail or does the tail wag the dog? Now, coming from the S&P 500 pit, I'll tell you one thing for sure is that tail can wag the dog. That is for sure. Now, the tail does watch the dog and it's stuck to it, but from time to time, believe me, it is definitely the tail wagging the dog. So thanks you very much for your advice. Oh, you're welcome. Try to control my yes, exactly. Stick to your plan, Teresa. Yeah, impulses. Here's the thing is now I'm guilty of it just like everyone else is. Well, I have in the past more than now, is that you trade off of either instincts or impulses. Instincts for me is more about getting out of trade, knowing when things are going to go bad, where I will say, you know what, I'd rather take a small loss or a small profit than just certain things are not adding up. Like there's global tensions. I mean, like, for God's sakes, if we all was starting to have like really leaning towards a nuclear conflict with Putin, things will get crazy. Of course, if that happens, we're all gone, so it won't matter if it really does happen. So keep on trading. You're in Lima, Peru. Okay, hey, thank you from Lima, Peru. That's great. You've got probably much better weather going on there. Well, actually, you're kind of latitude-wise, you're south, as far as south as, yeah, you're a little bit less than we are here in Chicago, I think. You probably have a little bit warmer weather than we have here. So summertime now, yeah, you got your summer going into fall, and we're about to, springtime hits next week. Yeah, that's right. So that will be fall for you. So that's right. You're in the reverse in the southern hemisphere. So yeah, you probably have a very nice tan, Teresa. Right now I'm as pale as a ghost. If you watched my video from yesterday, I actually have a little picture of me on the corner. I actually show my face every once in a while, but I try not to use up the screen too much. So anyhow, great questions from all of you guys. Let me finish up with the US dollar Canada, and we'll get to a couple other markets. So US dollar Canada, once again, we need to challenge these highs. Should we do so? I don't think you're going to get much of a build. I think if there's anything, it's going to be a grind higher. Now, it is making consecutive higher highs and higher move lows. That is the trend. I'd be careful buying into this one. There's a lot of fundamentals that don't add up when it comes to this one. Can I look at the FTSE? Yeah, I will look at the FTSE after I finish the Canada. So, all right. So we have the US dollar Canada. If we take out this last swing low, now that would be something to watch out for, because if you look at it on the monthly basis, we've been going sideways for a while here. Now we had this nice bullish engulfing line buy signal that occurred back here. We had our nice little rally, and now we're looking to break out from this range. If we fall through this support here, well, then that's the overall trend is lower. That would mean that we're coming off a lower move low and a lower move high, looking to make new lows. That trend, I think, if it wasn't for a lot of the big fundamentals going on with the Ukrainian war right now, I think that would be very likely to happen. There's divergence in the US dollar versus most of your big currencies. You have dollar strength versus the euro right now. You have dollar, which is the biggest component of dollar index. So that's why you're going to have, as we have more divergence, the dollar index could still go higher, but it's going to be a grind. Like I've heard a lot of pundits say the dollar index is going to 100 and it's going to 110, 120. It's like, whoa, 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 whoa. The only way that's happening is if the euro crashes and the pound crashes, and then virtually every other currency crashes versus the dollar. That ain't happening. US dollar Canada, I can see this being a very big bear, especially because Canada is a commodity producing country. And our administration and their administration, for some reason, which boggles my mind, because, I mean, they're both communists as far as I'm concerned, they can't get along. And I thought that if there was one country and that we would be seamlessly getting along with foreign policy, it would be Canada. So I don't know what your take is on the U.S. administration, but our foreign policy is horrible right now with what's going on. So, but needless to say, yeah, I would watch those levels. With the Fed meeting, I think we could have a breakout. Is it going to be the upside or downside? I can't tell you that one. But whichever way it goes, I would follow that move, because should we break out on the upside, well, then you're making higher move highs after higher move lows on the short run, but the super long term and long term is definitely bearish. So if we do fall through support here, especially taking out this low, we'll be leaning on this one, and then you're looking at lower move lows, lower move highs, trending lower on the short term, and the long term intermediate sideways will be over. All right. So let's get to Deep Thoughts question. We got, just want to make sure. Okay, YouTube, thanks for the shares and the likes on that. We appreciate that. All right, so Deep Thought, let's get your question answered. Okay, appreciate you for chiming in. All right, so we're gonna look at the FTSE. All right, index FTSE.
We can look at the cash. We can look at, let's see, let's go to this one here. All right, no, that's the currency. We don't want that. We want the FTSE. There we go. All right, so what's going on with this market? I'll tell you what's going on with this one. We'll also pull up to do a comparison. If you want to know what's going on with the FTSE, you might as well have a comparison with the S&P 500. See, if we go to our market tab here, you go to futures. Futures are all on a delay. But let's look at how the S&Ps have been moving. All right, so as you can see, lower move lows, lower move highs. We've had a nice correction going on in the S&Ps. And on a monthly basis, we had this bearish engulfing line sell signal that occurred just a couple of months ago. That's a big deal. This little slide that we have here going on in the S&Ps, and this is what we're showing you this because we will get to the FTSE. Let's see how far we can get on this one. So let's just say that we use the old traders 50% rule, which is a Gann thing, which is also a fib thing. That's the very least that we're looking for a correction right now. We have a long way to go, folks. There is a lot of follow through to the downside here. This is where we had a top area right here, right, and then we also had a bottom here. It's going to be a big pivot level. So this is for the S&Ps. Now this is the S&P mini futures. So this is as of yesterday. So now let's look at the FTSE. All right, this one swinging, making lower move lows, lower move highs. We did have a nice little retracement to the upside. It's stabilizing here. Now, one thing about the UK that the FTSE does have going for it is that oil is strong. Okay, as long as oil is strong, that helps to support the FTSE index. The slight correction I think that we have now in oil is that's why you have this sideways trade that's developed over the past few sessions. But as a whole, I think that's going to help to lay strength on it. We do have the U.S. Fed meeting, which in the short run should cause a little gyration. Now the trend here is a bear. You're making lower move lows, lower move highs. A couple of sessions ago, you made a lower move high on the longer term basis. Short term, this thing was bullish. Now it's consolidating. Okay, I would say that as far as with the FTSE, what you have as far as the potential to go, let's go to the monthly. Okay, so now this looks a little bit different than the S&Ps. The S&Ps has been trending lower. This is 2 months ago it topped. Okay, this is only 1 month ago it topped. So this is in a little bit more of a lag, but look at where it's at. It's 50% of the range. This is a big deal as far as strength for the FTSE. Now, the S&Ps has a reason to crash more than the FTSE, okay? And another thing that the FTSE has going for it is that since Brexit, the UK has full sovereignty, okay? So I'm not exactly bullish on the FTSE. Now, remember here, if you look at it, if it's a sideways trade, we're buffering in the high point of the range. We fell off of it, okay? This is pretty much where it's at, okay? But look at what we did. We came off this higher move high. Then we made this lower move low, okay? That set us up for big sideways, okay? Because we had this previous low, then we had this swing high, all right? And then we started to correct back. We tried to pull back, hold up, and then we failed. You're kind of like a head and shoulders almost here. Big precipitous drop, overtraded, trending down, and now the UK, as they come out of their lockdowns, are starting to stabilize. You know, they climbed and climbed and climbed. Now we finally have the lockdowns. They're fully open. And here we get this little sell-off because of the market volatility caused by the Ukraine, but it's absorbing it. You know, so I think that you can see, I would look to buy dips in the FTSE. I'm not overly bearish. I'm not overly bullish on this either, but I think that you would see on the monthly basis that we might be starting to set a base. If you look at it where we have support here, now this is the big failure. And this was the big resistance area, became support again, became support again. Now if we fail from here, this is big. Think about it as 1 time, 2 times, 3 times a charm. The next time we fall below here, we can get a correction. Okay, now as far as how far will we go with this.
We go up to here, and let's find our 50%. So here we go to there, and then we also go to here. Okay, so somewhere in this range right here is where I can see us breaking down to, right into this area right here. Okay, this is where I think you'll find support in the FTSE. Now, should the S&Ps, now look at this, this would be a good thing for them to correct down to here, and then the FTSE correct down to here. Should we find a base in the S&Ps and at least go sideways or bounce and go higher, then I think you're going to see the FTSE do the same thing. Base here, you can see there was consolidation here. Here was the buffer to get up, and then boom, once it was able to get above there, we have strength again. So I think you will have a little bit of pressure should we fall down once again. If we take out the low from today or from this month, then I would say you're definitely going to see another run at support. But unless that happens, I think you're going sideways. I think you have some strength here, you know, something that that doesn't exist in the S&Ps. Another thing is that in the FTSE you don't have valuation problems like you have with the S&P 500. I was talking to some people the other day about what is the biggest problem with where the market's at. Well, we haven't had a bear market for a long time, for one. But what most people don't realize is that with the current slide in the S&Ps, some really big name stocks are only down like 10%, but the broad base of stocks are down 30-40%. That's a big move considering that the market as a whole isn't down that much. Okay, but you have companies like Tesla with a PE ratio that is just, I mean, so inflated, that's ridiculous. So many other companies that are as well. Now, should we have that correction down towards that area that I was showing you? That's, I think, going to be a great buying area for your true companies that are strong in the S&P 500. But those are more, they're not names you typically hear, like for instance, AutoZone. That stock, they're only down 10% right now when most of the stocks in the S&P 500 are down 30-40%. That's the stock to look at to buy once the S&P gets down to that corrective point. Because even if they continue to falter from there, your stock like that is just most likely going to rebound. And they also have a projected growth of sales and profits of 30% over the next year. That's monstrous, you know. Not many companies are in that shape. So you got to look for companies like that, and I'm not here to just get into a stock rant, but these are things, these functions, as the more of them they're popping up and actually influencing that index, have also an influence on the FTSE. So you have a negative draw on the FTSE because the stock market in the U.S. is down. Once you see it base there, or even just consolidate for a little bit, I would expect you to see a big run up with the FTSE. So just be mindful of those lows. Should we get below there, then I would be then I would worry. But until then, I don't think you have that issue, unless the Ukraine-Russian thing really flares up. And that's the other thing too, is if things are mitigated down nicely with that deep thought, then you will probably see a big rally in the FTSE. So, all right, great questions. Really appreciate it, guys. Let's see, on YouTube, no one's, we're done with the questions there. All right, and we have no more questions on Twitch. All right, cool. So now let's finish up with a couple of other things. Euro US dollar, just want to see where it's at. Whoops. Euro USD. Okay, pretty much where it was at since we started this webinar. And then US dollar JPY, just want to check that out. Okay, now look at this. This one was down much more. Look at that. All of a sudden, it's above the half point of its range. It's almost even on the day. This bull could come ranging back. Remember I told you, don't get in front of this one. This is a good trend, and I'm not just saying that because I'm long. All right, let's take a look at the BTC USD. We'll wrap up with the crypto. As you can see, yesterday was a little bit upside, and now it's going nowhere. Crypto, it's kind of funny. Now you have Mexico acknowledging it as a valid currency, and a couple other countries doing the same, and then some others that are going to fight it. Looking for a breakout here. Right now, I don't have any expectations, don't have a signal. It's just caught in limbo. And I have to say, it's kind of funny is that you would think that because of this Ukrainian thing that the crypto space would be going crazy and what have you. Honestly, I'm amazed that you don't have a little more volatility. But I guess some of your biggest players also are restricted and they're trying to get their cash out. And I think that might be a big problem. I think that you have some whales that are, I mean, you got to remember that the whole cryptocurrency thing, it can definitely be used for nefarious money laundering and what have you. So I think you have a lot of dollars and euros and other currencies being sucked out of those investments. So I think that the selling and buying is matching up to a degree that the sellers are trying to get as much as they can, but people aren't buying it, you know, so they have to liquidate slowly, and you're just seeing this little rotation going on. The question is what kind of buying interest will come out of it? Well, I think that once the economies start flowing, if this UK and Russian thing gets mitigated, then you'll see an explosion to the upside and maybe see Bitcoin back up to that 55,000 area. However, in lieu of the way things are going, under the current market situations, the cryptocurrencies aren't acting the way they're touted and purported to. So I would say the trend is your friend. Stick with it. And right now this thing is grinding on support. ETHUSD. Let's take a look at this real quick. This one also, the range is getting tight. Now it's wedging. Now this thing is set up for a bullish rally to break out to the upside. My only question is, and problem with it is that I think that with what's going on in the world, it shouldn't be winding its coil like this. It should already be exploding. And since it's not, it makes me very leery. I'd look for buying opportunities. If you see a rally right now, unless it's really explosive with some decent follow through for at least 1 or 2 days, I would look at it as a rally to sell. Remember, you're making lower move lows and lower move highs. That's indicative of what? A bear trend. So be mindful of that until it turns out to prove itself to become a bull. It's a bear, you know. So, all right. So let's see. We have no more questions on YouTube. Thank you very much for all of those. You guys are fantastic today with the interaction, and also on Twitch. You guys, you have a great day. Unless somebody pops in with another question, I'm going to call it quits. Teresa, awesome interaction with you, foreign correspondent. Also, hopefully you get some sleep. I know, luckily you were awake, so you found us. But get your rest. Deep thought. Thanks for your questions as well. And hopefully you guys enjoyed the session today, and look forward to seeing you guys in the future. So you have a great trading day. Good luck with everything, and don't forget, if you have a chance to, and if you haven't done so already, to not do that. Let's see. Like us, subscribe to us on Forex Trading Unlocked on YouTube or Twitch, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also, whenever you need something, want to find us out, what's going on, go to forex-trading-unlocked.com, or go to our company page on LinkedIn to be part of our professional network of traders and what have you. People in the industry, so we'd like to continue your participation. So, hey, Teresa, thank you for that. You have a nice day as well, and good luck with your trading, and I'm sure with discipline, and if you have rational expectations and take your time, you will be successful.